today I will talk about 2022 Q1 GAFAM analytics. So today's topic is weekly news and COVID macroeconomy update and GAFAM 2022 Q1 analytics. And this is the 1 month the performance, and the Apple, Microsoft, Google, everything is going down. It's really bad. And the only thing that I can see it's green, it's the energy area, but and also the some of the consumer defensive. Around this area it's supposed to be the steady, but otherwise everything is red. So it's not good at all. This is the 1 month performance, and then also another 1 month performance in the worldwide. Alibaba is also minus 9%, TSM 9%, Sony like 16% minus, or something like that. It's very bad. So let's check about the COVID update, and we can see the blue means like most of the country is negative trend. That means like it's going down, which is good. And then this is Singapore. Singapore is new cases in 7,726. So US is almost 100,000 people. Then UK is 32, and then Israel is at almost 2,600. So overall it's a downtrend, which is good. This is the death rate, and also it's coming down. US is 390, and then UK is 200. Israel is 0. Okay, so that is good. So I think when we talk about this COVID-19 last year, it was still serious, but nowadays people are easing the restriction, so it's not that impact much nowadays. Macroeconomy, this is more impact. So GDP growth rate is minus 1.4. By the way, this is the all US macroeconomics, and the minus 1.4, which is it was expecting the plus, but for after this war, the Ukraine, the Russian war, and this GDP is it's the minus 1.4, which is like almost the same as last year. No, 2 years ago. 2 years ago, July, it was minus 31%. It was a big impact that time. I also had a YouTube. I think at that time, I don't remember. Maybe I had a YouTube the broadcast. Then it was very significant that change. Then now it's a minus again. So the unemployment rate is going down. Like 2 years ago, it was close to the 10. Now it's 3.6, which means like job posting is more than the job claim, like job seeker. So that it's easier to find a job nowadays. Inflation rate is going up. It's almost close to the 8.5. It's doubling compared to the last year, 4.2, which is it's a huge impact. So the central government, they want to suppress this inflation rate. That's why they want to raise up the short interest rate. Government debt to the GDP, this one is also going to be high. It's because one is a Ukraine-Russian war. They have to supporting the Ukraine people, and also another one is this 2020. That means like this COVID-19. They have to support the citizen people, the resident people, so that they can this. Everybody know about this. What's the significantly going up since 2020? Manufacturing, the PMI, this is going up. But however, compared to the last year, around the same time, it's still very low. It was very bottom in the 2022 June. So, but still, it's now it's recovering slightly. Okay. Then customer confidence. This one is it's compared to the last month, it's good. But however, compared to last year, it was still very low. This is because of inflation. Like the price is going up, then people don't like to buy the many things nowadays. So inflation is also impacting here. US 10 years bond, this one is going to be the 3. While this like just 1 month it was going up a lot. Like previously like March it was 1.7, but now it's almost close to 3. So it's huge impact. This is because like, the short interest rate is going up. It was expected. They want the central bank. They want to raise up this interest rate. So if the short interest rate is going up, then naturally this long-term interest rate is also going up. That's why this US 10 years bond is going up. It was like lingering between like 1 to 2 like previously, but within just 1 month, like 2 years, during this 2 years period, it was just within just 1 to 2, but now it's only 1 month it was going to be close to 3. So it's crazy now. Let's check about the Google. Google Alphabet report weekly earnings and revenue on the big YouTube miss. If we talk about this YouTube miss, but it's not only the YouTube. The earning per share 24.62 per share versus the 25.91. This is already they don't beat. Also the revenue 68.01. Expectation is 68.11, which means that it also cannot beat. YouTube advertisement revenue 6.87 billion versus 7.51. So this one is quite below. And the Google Cloud revenue GCP is 5.82 billion versus 5.76. That is expectation. So this one is only the beating, but otherwise they couldn't beat the revenue or YouTube advertising revenue earning per share. So overall, the analyst's expectation was very high. It's because the previous Q4 was very good in the Google, but now it's not so good. It's showing like that this advertisement is not okay. That is because they are saving the money to broadcast the advertisement because after this war. So that is a sign, like not only this Google, but also other companies too, like Twitter. So the targeting price is still, the analyst is showing brightly. It's looking up. Let's check about Amazon. Amazon shares fall on the bleak the forecast and the slowest growth since the .com bust. So Amazon, actually, they company recorded 7.6 billion loss on the investment in the electronic vehicle maker Rivian. So they showed the loss after I think the 10 years or so. Then growth rate is their slowest since the .com bust in the 2001. So let's check about this earning. Earning is 7.38 per share versus 8.36. It's very below. And in revenue 116.44 versus 116.3. This one is beating. The earning is not okay, but revenue is fine. AWS 18.44 billion versus 18.27. It's beating. Advertisement is 7.8 billion versus 8.1, which is it cannot beat. So this cloud is okay. Cloud, the Google GCP, also AWS, both of them are good. But however, the expectation was not expectation. They couldn't beat the expectation from the analyst. So that's why the price is going down now. Okay, so let's check about Meta. Meta is shared the surge nearly 80% after the Facebook parent beats the earning the estimate. The Meta surge is 17.6% surge after the company reported the better than expected profit in the first quarter. Facebook, the parent company, said daily active users rose slightly in the first quarter to the 1.96 billion from the 1.93 billion. but sales rose only 7% from a year ago, marking the first time revenue grew in the single digit. So Meta, like very previous quarter, it was not okay. It was really bad. So the expectation was very low. So that's why this time it was easy to beat. Meta report earning per share is 2.72, higher than 2.56 expected by the analysts. So the revenue came in at 27.91 billion, lower than estimated. The estimate is not written here, but it was lower. So the Meta stock rose 70.6%. It's still down about 40% since the start of the 2022. Alongside the left of the other tech stock, the plunge amid the concern over the rising inflation, the Ukraine war, and the return of the COVID lockdown in China. Yes, although I show you later the data, but still 40% down compared to the January of the 2022. So it was like this revenue, the earnings report was okay, it was good, but however, because the active user in this Facebook or the overall in the Meta was it's slightly going up, but however, this advertisement is not so good, so it's up and down here. So analyst is showing like this is currently almost 200, but they are looking up close to over the 300 or close or more than 450, but this one is very ambitious. Also, like the last year in the same time, they are almost close to or over 300. So it's going down. It's trying to recover, but not sure because of a war. Okay, so the Apple share the dip after the company warns of the possible 8 billion hit from the supply constraints. Apple's revenue grew nearly 9% year over year during the quarter ended in the March, but share fell nearly 4% in extended trading after the Apple CFO. The CFO warned of the challenge in the current quarter, including the supply constraint that could hurt sales by up to 8 billion. The tech giant authorized 19 billion in the share buyback, so they are buying their own share. 19 billion, that is good for the shareholder, but however, the Apple has a concern because this one is still the hardware company. It's not completely the software company. So all of this the supply chain is a big concern because of inflation and in supply chain, also this war. Okay, so then the EPS revenue, the iPhone revenue, service revenue, Mac revenue, iPad revenue, everything is good except for this other product revenue, which is not sure like this other product. But however, most of the stuff is okay. The concern is supply chain. So the Apple, the analyst price target for the Apple, that is, everything is looking up basically. Then let's go to the Microsoft, and the Microsoft earning beats across the board. Stock up on the outlook. Microsoft beats the expectation on the top and the bottom lines. Fourth quarter revenue guidance for each of the company's three business segments surpassed the expectation of the analysts. The survey by the Street Account. So the company announced the plan in the quarter to buy Activision Blizzard for almost 69 billion. So they purchased the game company, and then I think it was the previous quarter they announced. And then another one, if we see the earning is 2.2% per share, the versus 2.19, that is beating. 49 revenue is 49.36 billion versus 49.05. This is also beating, but however, price is going down. The revenue increased by 80% year over year in the quarter, which ended on the March 31st, compared to 20% in the previous quarter, according to the statement. So, but anyway, so this Microsoft is beating the expectation of this earning and revenue. But however, I think the analyst is expecting more, so that's why now it's slightly going down. But still, like the target price is still looking up. Okay, so let's check about their the stock by using the Python. So what I did is like I'm using this Yahoo thing, which I can get the Yahoo Finance data. From there, what I do is this. I'm using the matplot or pandas, like normal things, NumPy or those stuff. Then I put the Google, Amazon, Facebook, Apple, Microsoft into the one list, which I'm checking about the PSR, like PS ratio, and also growth rate. Growth rate is like profit growth, and also the revenue growth. I'm trying to calculate here. It's a 40% rule, which means like the bottom side I'm showing. Okay, so the list is I'm just grabbing the profit and the revenue and the growth, and then PSR. Then if I just summarize that one, then gross profit, total revenue, this is profit, this is revenue, and then this is growth. Profit growth and this revenue growth percentage is the sums up of this the revenue and the profit growth and the PS ratio here. Then eventually what we can see from here is the bottom side is this is the profit. So like right, if it's going to right, then you see the higher in the profit. Upper side is you can see more revenue. So right top is a good one. Left bottom is not good one. So this Microsoft is lower compared to this Google. Apple is higher compared to Amazon. Something like that. If we check about the PSR is like based on the current annual revenue. How many years until if they earn then based on the current revenue, how long if they earn the current revenue, then they can so the market cap, right? So the market cap is divided by this annual revenue. That is going to be PSR. So PSR is basically if you, for example, if your company is earning 100, if your company's market cap is 100, then my revenue is 10, for example, $10. Then if I just earn 10 years with $10, then it's reaching to my market cap, right? So that is this PSR. So PSR, if you go into the upper side, then this higher one is overvalued. This lower one is undervalued. So if in case of this the calculation, then if we compare all of these five, the Amazon is below compared to the Microsoft. That means like this Amazon is undervalued. Then this Microsoft is overvalued because it's over 12. This one is less than 4. Then PSR less than 4 is very cheap. This one is almost 2. That means like if they earn like this current revenue for next 2 years, they reach the current market cap, which is very surprisingly low. So Facebook, Amazon, Apple, and Google, it's like that. So this one is low compared to the Apple. Apple is higher than this Google, something like that. So, but at the same time, we have to check about this growth rate. Growth rate is sums up of this sales growth and profit growth. Microsoft is not that good, but however, Google is very good. That we can see here. Then also this total revenue, growth, and also this is the quarterly income state. Why I can see only 3 is because I just cut out the something which is if their growth rate is less than minus 20%, then I just cut. That means like only this company, 3 company is remaining here. So that's why but this one is a quarterly result. Quarterly base the growth rate. So that's why. But however, okay, I will just yeah, this one is same because this is a PSR. So what else I can show here? The market cap, right? What else? So this is the price. Okay. Let's go to the asset versus liability. So like right side, if you have more asset, and this one is more liability. If top one is more liability, the right side is more the asset. So the Apple has a lot of asset. At the same time, they also have a liability too. Same goes to this one, cash and then debt. More cash and more less debt here. More cash and then more debt here. So this one is like less cash, less debt. Let's go check about normalized price. Means like compared to last year till now, which the share price is going up or going down. This one is the one. It's normalized price. Means like this compared if this the after 1 year later. This one, for example, Facebook is showing 0.66 means like almost 34% down compared to others. So Amazon is also going down. If this one is more than 1, then if you purchase their share, you are earning now. So that is showing here. It's normalized all over this 5 company. What we can see from here is which company is making profit. Like if you have owned the share, then which company you could make the profit. And then the winner here is Apple. If you hold the Apple last year at the same time, then you are earning more, like 24% compared to others. So that's what we see here. Okay, so that's it for today. I just went through a lot, but if you want to know more about this programming stuff, then I'm just selling this, the how to analyze the US stock data with Python, verify 40% rule, PS ratio. I'm describing the more detail here. So that's it. By the way, this one is it's also same the calculation I'm doing for the Nasdaq 100. So this one is more interesting because normally there's some tool which you can calculate one by one, like one stock. You can just go deep into like PS ratio, revenue, growth, or those stuff. But there's no tool we can compare each other. This one is comparing the 100 share, like Nasdaq 100. So if we just check about that one, then the most important thing is this PS ratio. PS ratio is very important for the high-tech stock. Then for example here, what we can see is like a team, this Atlassian, is more than 25 PSR. That means like if with current earning revenue, if they are 25 years, then they can reach to the current market cap. That is showing here. So if this one is high, that means like it's very it's kind of overvalued. If this one is close to 0, that is very undervalued. So if we compare like team versus, for example, Okta, while their growth rate is almost similar, but Okta is better. But however, if we again compare to Okta versus, for example, let's say Amazon, right? sorry, up. So the growth rate is good, but however, the PSR is low. That means this one is good. Or, for example, Amazon is here, PSR is very low, but however, the growth rate is close to this 40. Means this one is very good. Likewise, you can just check like each other. By the way, like this, the data, just mixing up between the Q4 and the Q4 2021 and then Q1 in the 2022. So it's not so accurately comparing each other. But however, if all of this earning report is out there, then after that, if you run the calculation application, then you can see clearly which one is good value, which one is not so good value. That's how we check growth, like this. It's called like 40%. Means like you just summed up the growth rate of the profit and the revenue. That is horizontally described, and then also the vertically you just describe this PSR, PS ratio. Then we can see like this. I also added many more, but please check about the book. So that's it for today. So thank you so much for coming. Hopefully this one is helpful for you. That's it. Thank you. Bye.